Hey, what's up, guys? Kevin here. Seeing some very interesting things happening with Walmart, Target, and Amazon that I think are going to make a huge impact on all of us in a massive way. Now, this was actually my paraphrasing a video intro from This is John Williams from about 3 months ago when he uploaded a video and explained the warning signs, the writing on the wall, so to speak, of what we are witnessing happening right now. And I hope you all are prepared. And if you're not, then now might be a good time to tell your family to prepare. And I wanted to share with you some information I received in an email this morning. Webull now supports recurring investments for stocks, ETFs, and crypto in both cash and margin accounts. Nope, I'm not sponsored and I'm not being paid to promote Webull's investing brokerage platform, but I wanted to share this information with you all because I care about you and I want you all to have as much information and knowledge as possible. So Webull offers recurring investments, and this is a tool for investors to make regular and automatic investments. The email said that before you start, please note that once a schedule is made, market orders are placed automatically, no matter if the asset price is high or low. So this means you could end up buying an asset at an unexpected price. But some common questions typically asked by clients that I coach and mentor are, why do investors use recurring investments? Well, plain and simple, it saves time and energy, and it allows for simple dollar cost averaging. Also, what are the risks in recurring investments? Well, uncertain prices and unsuccessful order placements. And basically what you should know before you start is that recurring investments are available for cash, margin, and IRA accounts. Now, you can make a recurring investment schedule for all tradable crypto on Webull or on stocks and ETFs that support fractional shares trading. Inverse, leveraged, or volatile ETFs are not supported. Now, the minimum amount set in each schedule is $5 and the maximum amount is $25,000. Welcome everybody back to the channel. I'm Kevin and I'm here to bring you the news that matters most. And I received an email sharing one of the craziest headlines I have seen in quite a while. But before I share it, please consider giving this video a like and subscribe to the channel if you haven't already. Now, I'm not sure if this is considered boots on the ground insider intel, but a link shared from the YouTube channel Playback for a recent video posted on their YouTube channel titled TikTok Trans Woman Scams Followers of 370 grand. Oh man, sometimes I can't believe what I'm reading, but honestly now I know better and you just really can't make this stuff up anymore. Anything is possible nowadays and we need to be aware of that. Now, I'm sharing information and education to help folks improve their budgets and finances by being more aware of what is going on around them and how the impacts of the economy will affect us all while we try and adjust to huge inflation, high prices at the pump, and for food at the grocery stores, rapidly increasing rent, and a potential housing market crash. Oh, and this while we wait for the Fed to pretend to fight to bring down inflation. Don't get me started on that one. And then I see crap like this where folks are being scammed and wasting money on trans scams. Serenity now! Serenity now! Do me a favor and drop a comment below and let me know if you know anything about this crazy transgender scammer or if I should investigate it further and bring you guys a 411. But I will say that I'm a little bit concerned and I'm not sure if I want these types of terms in my YouTube browser and Google search history. Anyway, this reminds me of the young lady who was accused of scamming folks online as she pretended to be homeless and living in her car. Now, it isn't bad enough that we have enough of life's necessities draining our wallets. We now have to contend with scammers. You guys have seen them in the comments. Ignore the bots. I will not try to contact you through WhatsApp. If you guys want to contact me, my information is in the description. Now, do you know how much these transition surgeries and prescription medications even cost? I don't want to get too far off topic here, but they're hella expensive. Now, we need to talk about something of importance, and this is something you are going to want to make sure you pay close attention to. So come on in, bring it in. And I want to thank you all for always hitting the like button on all my videos. And I have noticed more viewers are sticking around for longer and subscribing to the channel. And I want to tell you all that I really do appreciate that. Thank you guys so much. So if you haven't already, please subscribe to the channel and click the notification bell too. All right, now let's get right into it. So FedEx warns of a global recession, cutting sales forecast by $500 million, while fellow YouTuber and Economic news expert John Williams warned us about this 3 months ago when Amazon started increasing wages and expanding at an alarming rate. Check this video out here.
It's happened with Walmart, Target, and Amazon that I think are going to impact all of us in a massive, massive way. So Amazon right now, they're reporting losses and they're reducing their footprint by 10 million square feet. They just went through a massive expansion over the last couple of years. And now what we're seeing is these losses, coupled with losses from Walmart and Target, these are low-cost providers. Why this is so important is when people want to save money, they go shop at one of those top three. That's where they go. They don't go to a small business because small business, unfortunately, they can't compete in terms of pricing. So if you're penny pinching, if you have 20 bucks or $50 that you want to spend, you're more than likely going to try to spend it where you can get the biggest bang for your buck, which is going to be one of those three locations. But now they're all getting hit with inflation, and what I think is ultimately going to happen, their next step, is going to be a real big problem. So the last couple of years, what they did, all of them, is that they increased minimum wage. They increased how much they were going to pay their employees, which did a couple things. One, the employees are happier because they received more money, kept up with inflation, they felt more secure. But it also put a division and divide between small mom and pop restaurants and stores and locations in which they could afford to pay for employees versus what these big corporations could afford to pay. But now what I think is going to happen is massive, massive layoffs, and I think they're going to start integrating automation and technology now, like right now.
Nah, he's on to something there. It's something we need to be very, very cautious of and be preparing ourselves for, especially if you're a worker, if you're relying on these warehouse type fulfillment, expediting, packaging, shipping, drop shipping jobs. Because these companies, they grew very quickly. They were trying to capitalize on the market, and they were paying a premium to do that. Now we're seeing the retraction. Now we're seeing the economy pull back. We're seeing the inflation really forcing many Americans to really be more conscious with their spending. But these businesses like Amazon and Walmart and Target, these giants, they're going to do all they can to survive. And what that's going to mean is scaling back, making cuts, reductions, and ultimately finding ways to become more efficient with their processes. And that really just comes down to automation, AI, additional technology, and less human workforce components.
This is what's going on. Amazon plans to sublet warehouse space to reduce excess capacity. Amazon is attempting to shed some warehouse space following a slowdown in the company has experienced in its recent e-com operations. The online retail giant is seeking to sublease a minimum of 10 million square feet in warehouse space and is also exploring options to end or renegotiate leases outside of warehouse owners, according to a person familiar with the matter. The move follows the first quarterly loss in 7 years for the company, which in April reported a decline in demand that has strained its warehouse operations after roughly 2 years, right, of outsized growth. So what I think is happening right now is they're seeing less people spend money. They're seeing that pullback. People just don't have the money they did last year, 2 years ago.
And please note that he said this is back in April. Like I said, this video is from 3 months ago at least. And that was then. Multiply the magnitude, the effects of month over month inflation, 2 quarters, 2 consecutive quarters of negative GDP. This is a clear example of warning signs that most people probably ignored at the time and said, everything's fine with me. I don't have any problems here. I'm still employed. We still got trucks rolling. We're still doing a lot of deliveries. The shelves are full. We have no issues. Look, this stuff takes time sometimes, but honestly, 3 months is a short amount of time when you think about it. And what's going to be even shorter is the amount of time between now and the next update that we get, that is a possible headline of Amazon lays off 50% of its workforce. And if you guys want to see my full reaction to John Williams' video about Amazon, Target, Walmart, small mom and pops, check the link in the description. Now, FedEx has warned that a global recession could be coming as demand for packages around the world is tumbling down. The stock market and shareholders are feeling the impacts too after seeing shares of FedEx plunge by as much as 21% on Friday. So, this was the biggest one-day drop after a broad sell off of the company's stocks in all of FedEx's stock market history. With shares of FedEx down a mind-blowing 38% so far this year, this can be attributed to FedEx issuing a late warning Thursday of last week that a slowing economy will be the catalyst that causes FedEx to come up short of its revenue target by $500 million. Weakening global economies, particularly in Asia and Europe, have hurt FedEx's express delivery business on top of demand for packages weakening considerably in the final weeks of the quarter. Now, remember, I told you guys our economy is interconnected and we all feel the ripple effects of upward trends and downward trends too. And FedEx is taking a very bold and transparent position by sharing expectations of business conditions further weakening in the now current second fiscal quarter. And just to make sure I'm not excluding anybody who's watching, if you aren't familiar with the term fiscal quarter, please comment down below. So, FedEx is seeing a decline in the volume of freight it is handling in every region around the world and is seeing a slowdown in America's spending with increasingly growing concerns in relationship to the strength of the dollar. Now, here's a glimpse at how the decline affects other markets linked in our economy. FedEx has further reduced flights and are temporarily parking aircrafts. FedEx is also trimming hours for its staff, delaying some hiring plans, and closing 90 FedEx office locations as well as 5 corporate offices. FedEx is also cutting $500 million from its capital expenditure budget for its fiscal year. Now, this will affect outside vendors, contractors, all sorts of folks, all sorts of businesses that rely on FedEx to keep them going. Now, FedEx said they are going into full cost management mode. So FedEx said its adjusted earnings for the quarter that ended August 31st will be down $260 million in comparison to the year before. And FedEx Ground Service missed its sales target by $300 million. Although FedEx uses independent contractors and not employees to make their deliveries, many of those contractors are complaining that rising costs for fuel, labor, and new vehicles has made their business unprofitable. And you all may recall the FedEx ground contractor who appeared on Fox News who threatened to halt package deliveries and all operations on Black Friday. And at no better time than the beginning of the holiday shopping season, which I warned you guys about in previous videos. The FedEx ground contractor demanded FedEx agree to change their compensation, but I'm not sure FedEx is in a position to begin increasing costs and overhead operating expenses whilst taking on $500 million losses. Know your audience. FedEx insists it will work with contractors who are having problems and has since sued the former FedEx ground contractor who has been the most vocal critic of the company as of late. Perhaps in hindsight, going on Fox News and putting FedEx on blast was not the smartest and most strategic financial business decision. And a recent survey released revealed only 11% of FedEx contractors are currently profitable, with another 35% barely breaking even, and that an astounding 54% of the FedEx contractors' businesses are losing money. So do you guys know what that means? Basically, it's not good. So if you work for any of these FedEx contractors, you may want to ask them how things are looking. But as FedEx stock crashes after a brutal profit loss warning, analysts point to a lurking Amazon. Now, this after announcements that Amazon is shutting down warehouse sites and canceling and delaying multiple other drop shipping distribution center locations. This is a bad sign, folks. Jobs are seriously at risk. Amazon announced the company is at least closing 3 warehouses and delivery stations in North Carolina as part of a nationwide cutback. One of the cuts on Amazon's list is a package fulfillment delivery station in Durham that employs, or should I say, employed some 400 people. Steve Kelly, a spokesperson for Amazon, said, "We regularly look at how we can improve the experience for our employees, partners, drivers, and customers. And as part of that effort, we closed a delivery station in Durham and transferred to different delivery stations." Now, At this time, it is reported that this closure should not affect the existing Amazon fulfillment drop shipping package delivery employees, and that Amazon would allow those some 400 workers in desperate need of a steady paycheck the opportunity to request a transfer to a different warehouse. Although this transfer, if approved, could mean a much longer commute, increased transportation costs, and more time away from family. But hey, at least they still have a job, right? And this just shows how much Amazon cares about their employees. But the company did announce that Amazon will be reducing the total number of facilities, including 2 others in North Carolina. A Greensboro Amazon Fulfillment Center and an Inca Village near Asheville Amazon delivery station, but did not provide a reason as of the time of recording this video. Now, Amazon operates more than 1,200 sites across the U.S. and has reported that the online commerce drop shipping retail giant is shutting down 44 facilities and delaying 25 new site construction builds. This is just the tip of the iceberg, folks. This is only the beginning. Heed the warning signs. Amazon cutbacks begin as the company has been tracking declining online commerce sales. Amazon CFO, Chief Financial Officer Brian Olsavansky, said that Amazon has too much space in relation to demand patterns. Buyer confidence is shifting, or shall I say dwindling. Thanks, inflation. And this shouldn't come as a surprise by now, especially if you have subscribed to this channel and have been watching previous videos up to this point. Amazon is also facing growing challenges from labor unions who are organizing to represent workers at warehouses. Can someone say increased pressure and demand and potential strikes and supply chain collapse? It is too early to tell what the intentions of the Amazon labor unions will be, but we have to be smart and keep our eye on the ball. And what's most interesting about Amazon closing warehouses and canceling new construction, drop shipping, fulfillment shipping centers around the world, and FedEx figuratively rolling around on 3 blown out tires before the peak holiday shipping season is there's chatter and rumors on the street that Amazon may have played a role in FedEx's decline after FedEx served up a brutal earnings pre-announcement last week, which sent its shares crashing. Now, I'm feeling the middle-class economy squeeze tightening up by the minute, and folks should pay very close attention to what's going on around them. Up next, we're going to discuss the collapse of the auto industry and car dealerships purposely destroying new car buying experiences with ridiculously high dealer markups, ADMs, additional dealer markup, and boosting new car prices by over 50% in some instances, which is not only deterring car enthusiasts from buying new cars and supporting brands and manufacturers, and further helping to promote sales and growth, but also pushing average consumers further away from new car purchases as interest rates continue to climb and buyer confidence continues to fall. These are all the right ingredients needed, plus a shoddy supply chain and semiconductor chip shortage to bring new car dealerships to an end altogether. I'm talking about direct to consumer, manufacturer to your doorstep. And that means mass job loss for many and so many other consequential damages as a result. Now, I'm also going to share updates about a possible stimulus check, the Biden administration, and a great side hustle idea. Oh, and SNAP Supplemental Nutrition Assistance Program update for soldiers too. So make sure you are subscribed to the channel and have your notifications turned on so you're alerted when I release these important videos. And if you're interested in building your YouTube channel and learning all the tips, tricks, hacks, and strategies that I've used over the years, click the link in the description and join the group. Love to have you. New videos posted regularly, and if you want one-on-one access directly to me, set up virtual meetings, contact me. My information is in the description. You guys take care. Be safe. I'll see you real soon. Bye.